All right, good evening, everyone. We're going to review the Robinhood portfolio today. And for today, I am up 0.42%, $135 gain. And in the after hours, I am up 0.27% for an $87 return. Let's take a look at the past week. Past week, I'm up 6%, $1,864. Let's quickly take a look at the all-time chart. The all-time chart reflects a 15% gain, $4,411. So we can see that the portfolio is trying to recover from the massive correction that we saw back in March. I believe February 10th was when the portfolio reached an all-time high, $35,000, and then a massive correction brought about due to the coronavirus. I went all the way down to about 23,000, and actually the chart reflects 24,000. But you guys can tell that my portfolio is trying to recover, and the stock market is betting on the economy reopenings, and there have been some quite significant changes in the portfolio that I have made, and I quickly want to touch on a few stocks that I wanted to talk about for this video. There have been some dividend cuts, guys. Let's take a quick look at the company that I was holding, Shell. They went through a dividend cut. So right now, Shell was up $33, but I think I sold this around $31, and they had a significant dividend cut. Right now, I believe that Shell was around 94 cents. I think they had a 94 cents dividend. They announced a dividend cut. They have not cut their dividend since World War II, and it was quite the shocker that when they did announce that the dividend would be trended back significantly all the way down to 16 cents. So you can only imagine how a lot of retirees felt about the dividend collapsing, and a lot of people got out. Initially, I did not sell this when they announced the dividend cut. I was actually hanging on, and I actually when I did end up selling it, because there was another company that I added to the portfolio. That's pretty much where that Shell money went, but I'm going to quickly talk about that later. Let's take a look, because it's been quite a while since I sold Shell. I think it was sold Shell, back in April 30th. I had sold Shell while I was still seeing a profit return. Shell got up to around $36, and then it sold off once the dividend cut happened. So let's take a look. I'm trying to get the graph for you guys so you guys can see. So right around this time, they announced a dividend cut, and the Shell dropped all the way down to about 28. Or actually dropped down to $29. But when I sold it, it was around $31 or $30. So I was still seeing a return on Shell. And this is still a good company, guys. I still like Shell, but unfortunately, I just don't see any end in sight due to the coronavirus. I really don't believe that there's going to be a vaccine all the way until possibly next year, until 2021. So you just don't know. You just don't know when the coronavirus will still be a thing, and I believe that there might be quite a spike in cases. Due to some people might be still following the social distancing thing, but these are really scary times because with all the stuff that's been going on in the world. And, I quickly tried to just focus. I want to just focus on the portfolio, but I hope everyone is being safe if they are, doing the protesting or whatnot. So, I definitely just want to feel that everybody's safe during these times. And, a safe protest to me is the way to go. But I just want to talk. I want to talk about stocks. Yes, Shell was sold, and I got out of Shell, and I put that money elsewhere. So, that's pretty much all I want to talk about with that company. But I trimmed the portfolio significantly because I really haven't been, watching the portfolio. I'm more focused on the M1 Finance portfolio. I just keep ignoring that, that Roth IRA. I need to put some more money in there and get that money to get that money up, so I can, compound. I think I only have one ETF, ticker symbol VOO, the S&P Vanguard ETF, in that portfolio, so I definitely want to get that money up. But I have 5 stocks in the portfolio, and we're going to quickly review them right now: Apple, AbbVie, Home Depot, Realty Income, and JPMorgan Chase. And let's quickly take a look at Apple 322 here. Total return is $1,427 for a 79% return. So this is just still killing it with the average cost of $179. And I just don't believe that Apple's ever going to get back down to that average cost. We're seeing quite the V-shaped sort of recovery here. We reached the all-time high of 320 on February 20th, and then the massive correction happened, got all the way down to about 224, and then we see the V-shaped recovery all the way back up to 322. So I'm still killing it with Apple, a 79% return, and you have to ask yourself, at one point, do you get out of Apple and just sell this? Because this is quite the return here, but I like the company. I'm just going to continue to hold, and I would love to buy more, but obviously it's way beyond my average cost, so I don't think I'm going to be buying any more shares until it gets around $185 or so. I just don't see it. I don't see it happening anytime soon, so I'm just going to hold it out. AbbVie, $93. I have 50 shares. I haven't even touched this. I really just let this go on cruise control, and I keep getting that dividend. $59, $59, and $53. So yeah, there's not much to say about AbbVie, and I am up 41% for a $1,368 return. They had, I think they had a drug approved. I quickly glanced over it. I really didn't follow that article on Seeking Alpha, but the FDA approved a certain drug from AbbVie, and it shot up massively. I don't know what the drug was about there, but it for the past month, it's up 12%. For the past week, up 2%. So AbbVie is, still a pretty good buy, but I'm not going to be buying any shares right now. That dividend yield is still pretty good. I just leave it. I'm just going to sit here, and I'm going to see what it does. I don't know if it's going to ever get back up to this 52-week high. I think that 52-week high, it got up around $100 something. It doesn't reflect it here on the graph, but I remember AbbVie was like $100 or so. Let me take a look here. Yeah, so like around January 26, 2018, it got up to $123. So definitely has the potential to do that once again, since they acquired, I think, another company. I think it was called Allergan or something like that. They acquired another company. And AbbVie is now like a massive pharma. It's a massive pharmaceutical company. So yeah, very good stock. Maybe if you buy below $100, maybe there's some value here. I'm not sure. I'm not buying any more shares, but I'm up quite the return on this stock, 41%. You can't complain about that at all. Home Depot, $249. Let's take a look. I still have 20 shares. I definitely wish I bought more shares at around that average cost. I was kind of playing it safe there when I bought Home Depot, because I just didn't know what was going to happen with the the coronavirus scare. The coronavirus scare really tanked the market. A lot of stocks were crashing. So total return is of 62%, so $1,925. And there's another stock that's just killing it. I wanted to buy some Disney. Let's take a look at where Disney's at. I'm quite curious where Disney is right now. 123. So we're seeing a V-shaped recovery here. Here's the V. Got up to February 20th, seems to be the day where the stock market was just overpriced. And the massive correction happened, and Disney got all the way down to $85. We're still there, down 36%. So I can guarantee you some people bought that dip. I was looking at Home Depot, I was looking at Disney, and I was trying to decide which one to go with. I went with Home Depot, and I think Home Depot's the winner here. You really can't. That's insane. 62% return on Home Depot, and this is definitely a high growth stock. For the past 5 years, it's up 122%. So the Home Depot, excellent company. This company it continues to fire on all cylinders. It continues to be one of the best companies within its sector. So definitely a strong company to hold in your portfolio if you can buy it cheap enough. Let's take a look at Realty Income, $60.39. Looks like in the after hours has gone up a little bit. Let's see. Old dividend, $54. So that's interesting. Shares, 235 shares. So it's quite the portfolio diversity. It seems like I put my entire, at least half of the portfolio into Realty Income. And the total returns of $2,000 for a 17% gain. So why did I do this? I did this because Realty Income is a fantastic company. I love their management. I love the monthly dividend that you get. And, after selling out a shell, and I've talked about this in the previous videos, I said I wanted this company. I like this company. I like what this company is all about. I like their diversification in the real estate sector. They have a lot of, good properties that, they're leasing out. So I was on their website the other day. I was just curious to see what kind of properties they're involved with. And I saw a whole bunch of Walmart. I saw some theaters. They have their hands in absolutely everything. So they're quite diversified within that aspect. But 235 shares. I love the management. I just kept buying. I just kept buying this when it hit around $50 or so. May have pulled the trigger a little bit too soon on this because the average cost is $51. But it started sinking down. It started going down to 49 and 48, and then everybody was just selling off, and I just kept putting more money in there. I sold AT&T. I got out of there. I sold it because if you look at O doesn't really. They're a fantastic company. They're managing their debt load. I know AT&T has a high debt. PPL, I sold them. So PPL, AT&T, and RDSB, I sold them and put all that money into Realty Income. And I'm getting a monthly dividend. I'm at a 5% dividend yield, and I'm already up $2,000. So this company is they're smashing it. They're really on the comeback here. And I don't know what I'm gonna do if it gets to $80. Will I sell it out? I'm not sure, but until then, I'm just gonna wait. I get a monthly dividend to enjoy myself with that. And this company prides itself on calling itself the monthly dividend company. So if you look at RDSB, they cut their dividends, so I got really burned with that. And I was looking for a company that knows where it's going, that has a bright future. They have a great management system. They have a great dividend, and they like the dividend. They like to pay its investors for that nice appreciation. And half the portfolio is in Realty Income. So very, very interesting play there. JPMorgan Chase, $106. I have an average cost of $91.90. So I bought a little bit more JPMorgan. And like I said, I like the banks. I like the big banks. Banks aren't going anywhere. The new policies that are in place from the 2008 crash, they will support the banks from failing. We can't have the banks failing like the 2008 crash, because that would definitely be some scary times. But some people like Bank of America, some people like Wells Fargo, some people even like Visa. Some people think that Visa is like a bank stock. I think it's like a sort of like technology / bank stock. But I'm putting my money in JP Morgan. I think they were undervalued where I bought it. Average cost was $191, and it's a pretty good dividend yield on them. So it's a great company. It's one of the better banks that everybody seems to trust. There's some trust issues with the other banks, Wells Fargo with the scandal, and just the customer service with Bank of America. Not a lot of people aren't really high on their customer service, but JPMorgan Chase, you never hear about them. They're always having good policies in place. And I bought 50 shares, so we'll see where it goes. And that's it. 5 companies in my portfolio currently, and I might put an ETF in here just to diversify a little bit more, but I'm quite satisfied with how the portfolio is starting to recover right now. I mean, it really is a V-shaped stock market right now. My portfolio reached an all-time high of 35,000. It corrected, and then it's all the way back up to 32,000. So we'll see where it goes. I'm getting paid a dividend to wait, and that's pretty much it for the video, guys. I hope everyone had a great trading day. Again, the companies that I sold was PPL, AT&T, and RDSB. and I put all that money into realty income, and I'm already up $2,000. So we'll see how this play turns out. That's going to do it for the video, and I'll see you guys next time.